Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
And welcome to the Investor Coaching Show. I am Paul Winkler, talking money and investing. So, some of the things that I'd like to cover today, a couple things that maybe I'll hit from a different direction than sometimes I'll hit. Just basic investing. When I have conversations with people, and they're just really on a basic level, sometimes I love seeing the light bulb come on for people. And quite often what happens when people don't necessarily get that light bulb moment is because you just lose them. And I thought, I want to make sure that people don't get lost, because it is really easy for you to get sucked in and make mistakes when you don't know what you're doing, why you're doing it, you're confused. We get overloaded with information. It was the whole idea, wasn't it, that when we got more information, that life would be easier. I was talking to somebody about this week, and I said, there was a whole idea, the information age, AI, information on the internet, access to information was supposed to make life so easy, and it was supposed to make investing just a much better experience, because now I'm investing with information. Knowledge is power, right? Well, not if it's the wrong type of knowledge, number one, and not if I'm overloaded. I'm just overwhelmed. There's just too much information coming at me. And that is, I think, what is really going on right now. You look around the world and you go, wow, there's just access to information on everything. And there are just basic myths of investing that just are so pervasive, and they continue on because the industry, they benefit from these myths continuing on. You look at AI, where is AI getting its information from? It's getting it from the internet, which is getting its information from what? Posts. Who are the posts by? The investment world, the mutual fund companies, the investment companies, the insurance companies. And you can't necessarily depend on the world of academics. As much as I love academics, you can't necessarily depend upon that to be objective. As I often talk about, a lot of times these colleges are catering to the investment companies they're getting money from. It's, you look at the government and how it tends to have this influence on academia. It's the same thing. There's no difference, really. Academia is very much driven by where's the money going to come from? Where's the research money going to come from in some areas? Or where are the students going to come from? Where the students are going to come from are the big investment firms when it comes down to the colleges that teach financial planning. As much as I love the financial planning process, and so much of it is so good. My son and I were talking about that, and he's been studying some of these things, and he's been coming in and going, Dad, what does this mean? What are they talking about here? And I'd go, well, this is the way to explain that. And he was like, why don't they explain it that way? And I'm like, I don't know. And he says, and by the way, why do they have so much information in here and data on tax laws from 4 or 5 years ago? And I'm like, yeah, that's another good question, buddy. Why? I think there's just a laziness. I don't know. I don't know what other way to describe it other than that. So it's just very frustrating. So, it's to watch it from my son's perspective, growing up with me and hearing me talk all the time, and then having me explain things to him, and he sits there and goes, wow, this makes so much sense. And then, but when I read what they're saying regarding, how this insurance product works or how that works, it's just confusing. And I said, well, it may be partly the reason it's so confusing is that it is driven not from the need to necessarily educate you, but the need to make sure that they don't offend the company that sent you, if you came from a big brokerage firm or big insurance company, to offend them and drive you away from selling the products that they want you to sell the public. I mean, that's really what it gets down to. So one of the things that I got in conversation with a newer investor, and it was, why is the industry the way it is? Paul, you talk about this stuff. Why is it this way? And I said, well, number one, if you look at where people think investment returns come from, you are appealing to their basic thinking on how things work when you hear some of the things that the investment world is saying. In other words, and this is the way I worded it, I said, where do you think investment returns come from? What do you think the job of the advisor is? And it was like, well, get me in the right stock, get me in the right areas of the market, and keep me away from the areas that I had to stay away from. So their job, as you see it, is to find the stock selling for 50, and when it goes up to 70, they sell it, and you've made $20. And there's where returns come from. She goes, yeah, it's kind of what I was thinking. And I said, that's not realistic. Because it's not because these people are stupid. It's because you have so many people that are so smart that they keep the market on a level playing field. When somebody says, hey, I think this stock is worth, it's selling for 50, but I think it's worth 60, let's say. There's somebody on the other side of the fence that says, oh, actually, because of this, and this, it's actually only worth 40. I really think it's worth less than that. And, one of the two of you is going to be wrong, right? So you're playing a game where you think you're smarter than other people. And the reality of it is maybe you'll get lucky. Maybe you'll nail it one time and you'll get that company that's selling for 50 and it's really worth 70. But then you're going to be on the other side of the fence the next time. And we got into talking about, the people that they did the documentary, The Big Short. And I'd explain short selling and what it was. But the idea being that these people nailed it out of the park. And they basically got this whole mortgage crisis, subprime mortgages and all of that. They got that right. And I said, but the funny thing is they almost lost it all. If you watch the documentary, that's actually what they say, is they came super, super close to losing everything because they had to be right in a very narrow window of time for the trade to actually work. And that was the problem. Now, there have been predictions that have since been made by these people that weren't right. But their fame was actually, made manifest through the first documentary. So, the reality of it is people won't remember when you're wrong a lot of times, but they certainly, for some reason, remember when you're right. And you go, well, why do they remember so much when you're right on a guess? They remember simply because the media tends to play that up because people want somebody that can predict the future so badly that they will overplay the hand when you are right. And, you'll come out with articles, you'll come out with documentaries, you'll come out with books, people will come out with all kinds of things when they hit it, when they're right. And people remember that. Now, when they're wrong, people just quietly forget. They just, didn't quite get that right. And people don't hold them accountable. I see this a lot of times on TV where you have these well-known investment managers and they'll come on, and whether they're paying to be on there or whatever, I don't know. It's above my pay grade to know exactly how all of that works. I know some people will pay PR people to get on the TV shows. I remember one magazine actually, and they were actually talking about having me do a column in their magazine. It was a well-known financial magazine, and come to find out I had to pay like $10,000 to do it. That's what they wanted me to do, is pay. And I was like, I'm not going to do that. But it gave me an insight into how the world worked. That's what I thought was so interesting. So, a lot of times what happens is if somebody's right, you'll hear it all the time. People will talk about it all over the place. But if they're wrong, well, they're paying customers. You don't want to embarrass them. So you don't necessarily call it out that, hey, last time you were on here, you totally screwed up. So sometimes what they do is bury it when you're wrong. Now, the other thing that happens is this, is people believe that the job of the investment manager is tell me what's going to go on. You are really smart. You study this all the time. You ought to be able to tell me what's going to happen next or where things are going or what I should be looking for, right? And that's your job to do that. And a lot of times what you'll see is the ads and the commercials, they will actually play this idea up. And, an example, I was actually recording, there was a TV commercial I saw, and this is what they were saying in the TV commercial. I'm going to talk about it as I go through it. Just check this out.
Nuveen invests with the foresight and vision to anticipate the needs of future generations, to build strong portfolios that deliver lasting legacies, to innovate and adapt for what's just around the corner. Because after 120...
Okay, so number one, to innovate and adapt for just what's just around the corner. The question that you have to ask yourself is, how do they know? This is a TIAA company, very big company, well-known investment manager. How do they know what is just around the corner? Because let's face it, what was the biggest, as I often point out to people, what was the biggest driver of stock market returns in the past 25 years? You would have to say it was 9/11. Because I remember that distinctly, that I was stuck in what other place could Paul be stuck in but New York? Not the city, thankfully. I was in upstate New York, visiting folks, visiting family. And I was stuck up there because we could not fly out. I was supposed to fly out. I wanted to say it was like that Tuesday. I was supposed to fly out, and all of a sudden everything got shut down and we were stuck. And I remember the stock market just closing. That was it. Everything was shut down. And when markets reopened, they reopened at a much, much lower level. But one of the biggest drivers of the stock market of the time, return-wise, and negative return in this particular case, was brand new news, something brand new. Now you look fast forward and the banking crisis, that was awful. And it was news. It was news about how these banks but there were people out in the financial channel saying, these banks are just fine. Everything's just great, and yelling from the top of their lungs that everything is wonderful. And then all of a sudden, like a week later, some were just bankrupt. They're gone. And financial institutions just gone. And yet they're having the audacity to say, we're going to help you invest for what is just ahead. And that is incredibly appealing for investors. And I've talked about, huge mutual fund companies that are out there saying, here's what we think is going to happen. What's going to happen? Well, just go out there and look for predictions or forecasts and tie it to any investment company just about. And you will see they have forecasts, what they think is going to happen going forward. And you say, well, I hope they don't act on it with my money. But guess what? They wouldn't put it out there if they weren't acting on it, because they think that's what you want. They know that's what you want. You want somebody that does that. And I'm telling you, you don't have to be able to predict the future to be a successful investor. When I own companies, when I own stocks, I often talk to people and I say, hey, do you think about the stock market as a gambling casino? Yeah. I think it kind of feels like a gambling casino in a way. And I say, yeah, you know why? It's because that is how the investment industry tends to approach it. They approach it like a gambling casino. Like they've got a prediction on what's going to happen next, which number is going to come up first or next, or what's going to happen as far as the roulette table is concerned. That's how they approach it. And the reality of it is people get that idea, especially if they've invested and they lost money, they get this idea that, it's a gambling because this is crazy. I'm not going to do this. I'm not going to do this anymore. And, the reality of it is if you own a business or you know somebody that owns a business, would you think of their going to work every day as being a gamble? And I said, the answer is no. They're just going to their business. Now, will their business go up and down in value? Yes, all the time. Will your house go up and down in value? Yes, your house goes up and down in value every single day. Why is it the real estate investors tend to be more successful than stock market investors? And I would submit that the reason that they tend to be more successful, it's not always. A lot of people are terrible real estate investors. I have a lot of friends that are awful at it. And they'll say, oh gosh, this is terrible. But in general, people have this idea that owning real estate is a great thing. But why? Well, it's because you don't buy and sell and buy and sell and buy and sell. Typically, you buy a piece of property and you own it. Think about your home. Maybe you bought your home for a fraction of what it's worth now. And the only reason that your net worth is higher is because you didn't buy and sell and buy and sell it like you would a stock portfolio or like what most people end up doing. But that's what that commercial is just leading you to believe, that that's their job. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.